4 major banks have now passed on the RBA's latest interest rate rise. The Reserve Bank lifted rates by 0.25%, taking the official cash rate to 2.6%. Joining us live now is Barrenjoey Chief Economist Joe Masters. Joe, appreciate your time. Thanks so much. Just firstly, take us through how the markets reacted to this today. The RBA obviously surprised a lot of economists yesterday by sticking to that 0.25% increase instead of the higher 50 basis point shift that many had been expecting.
That's right. So I think there's two elements to that. The first one is that the market and most economists read the governor's comments at the parliamentary testimony to suggest that the step down to 25 basis point moves was a little further away. And then at the same time, we've seen globally central banks continue with these supersized rate hikes. And of course, most recently from the Fed, and some pretty strong data continuing to come out of the US. So you're right. Most economists were sort of surprised by that move. And also we've seen a big move in markets right across the curve, bringing down yields, and also a big move in currency markets.
When do you expect the impacts of these rate rises will actually kick in? What have we seen in terms of consequences when it comes to the property market? We've seen retail spending still going through the roof in terms of hitting records. When will it actually impact behaviour?
It varies across the economy, and I guess that's why economists talk about the long and variable lags with monetary policy. So as you said, we've seen quite a rapid impact on the housing market. In fact, Sydney house prices started falling in January of this year as fixed rates started to rise. But as you said, also consumer spending still staying quite strong. Look, at Barrenjoey, we actually think that consumer spending can remain quite elevated over the balance of 2022. Households are yet to feel the full brunt of all of the rate hikes. We're hearing from major central banks that it takes about 2 months or so to actually see an increase in the repayment dollar amount. So there's a lot still coming down the pipeline for households, a lot of letters in the mail there. We also know that the wealth effect from falling house prices takes about 9 months to feed through. And we also know, of course, that Australian households have saved a lot of money during the pandemic. So that's providing a little bit of relief alongside very low unemployment. But what we do think will happen in 2023 is all of those things will shift. We think the negative wealth effect from house prices will start to hit. We think the majority of borrowers will have to reduce some discretionary spending to meet their interest rate payments. And we do think that the unemployment rate is now at its bottom and may trend up as the economy slows through next year.
So, Joe, what do you think we can expect for next month? Do you think we're tipping another rate rise on Melbourne Cup Day?
I think that's right. I think that's what we can expect. I mean, the language from the RBA yesterday clearly indicated that they think that there are further increases, noting the plural there, in the period ahead. So we think that they'll raise rates by 25 basis points in November and again in December. And then beyond that, I think the outlook is fairly clouded. It will depend on how the domestic data is looking and what happens offshore. We actually think that that will be the last rate hike. We think that by February, the RBA will have enough data to see that the domestic economy is slowing and to be more confident that inflation has peaked.
Well, looking at what is happening offshore, we're hearing the R word a lot at the moment, recession. What's your view in terms of whether UK and the US are out with that and whether Australia could be likely to go into a recession?
It's a confronting global backdrop and one that's increased the probability or possibility of recession across a number of economies. We've got obviously developments in the UK and that's still playing out, but that looks pretty severe. We've got Europe facing winter and an energy crisis. We've got the US that's got a central bank that is clearly committed to bringing inflation down and appears to have accepted the possibility of recession there. We've also got, of course, China and Japan that are fighting different battles and intervening and worrying about currency weakness on their side. So there's a lot happening there, and Australia is a small, open economy. So we have to think that those chilly winds from offshore will have an impact. On our forecast, we think the economy will just skirt a recession, but it's very, very evenly balanced, and it really requires all the ducks that are on the wall to stay on the wall. So we do need to see business investment remaining quite strong. We need to see commodity prices that we think will come off but remain elevated by historical standards. Those things will provide some buffer for the Australian economy.